Abhishek, hi, good to have you with us. How have you been?
Thanks, Ashu. Very good. I mean, it's one of those good times in Mumbai to kind of enjoy the rains and the weather. And good to see you here. Very excited to be on the show.
Lovely. I hope everybody at office, everybody at home is safe. These have been very difficult times, specifically in Maharashtra, Mumbai. I hope everything is safe and
Yes,
getting back to normal.
getting back to normal. That's what everybody's hoping for.
Wonderful. Abhishek, this is a session that I'm particularly looking forward to, right? And particularly excited about, right? I think last few years have been very, very exciting when you look at the overall, landscape of India, right? And the way fintech as an ecosystem has evolved, right? I think, we were essentially a cash starved and a credit starved country, right? And which we continue to be, right? Across many, many layers. I think, but we're getting there fast, right? And I think, but the pace that fintechs have brought to the entire scheme of things has been absolutely phenomenal. The way they've actually gone out understanding risk, defining risk, absorbing risk to a certain extent, right? And also made our banking system a lot more efficient, right? Which was a little risk averse, right?
Right.
Given the construct of the economy that we've been in, right, and the priorities that we've been, and the stratas that we have, right, and many layers that we have. So that brings in a very different kind of a complexity. But I think fintechs have really killed it, right, in a very efficient way. And I think are helping expand, the velocity of money in a much faster way, more efficient way, right? Efficiency is now kind of coming together. So that makes this conversation very exciting in that sense. But before we dive into the story of Flexi Loans and you going out and building Flexi Loans, right? I'd love to know a little more about your background, right? A quick round of introduction will be helpful, and from there we dive into specifics.
Sure. My life is actually in three phases. First part of my life was just like everybody else. Mera beta engineer banega. So I grew up with the dream of getting into an engineering college. My father. I went to IIT. So I graduated from IIT Bombay in 2005, and this was the time when nobody was actually doing engineering.
Right.
And everybody was doing banking and analytics and data science because those are the things coming up. So I picked up data science. So my second part of the life was all about kind of now really do what you like and work with some amazing bunch of companies, Dell, Fractal, Inductis, which I did my MBA from ISB Hyderabad. And that 2008-9 period was really good because I found two groups of people. One is my three co-founders, Deepak, Manish, and I were friends at ISB. And 10 years later, we started the franchise, but that friendship is that old. And I also met my wife there. So she has a very special place in my heart. And then I spent about 5-6 years in London. And that's where I actually picked up fintech. So data science services I knew. But the amount of chatter and the amount of growth that was happening in the UK, US region was astounding. And so in 2016, decided to come back to India and start Flexi Loans with these bunch of friends. And that's the third phase of my life, which is giving loans every day and collecting it back. But it's an exciting journey that we've been in. And I'm really kind of amazed at the opportunity that India presents today for these fintech lenders, and happy to be a part of that.
Awesome. Abhishek, I think like I said right at the start of the conversation, right? I think last few years have been absolutely exciting, right? When you look at the overall landscape, right? And I think the way fintech is kind of picking up, right? I think also the fact that education is picked up, right? So people have become a little more sensitive around, understanding, many of these aspects, right? I think aspirations are taking a very different kind of a shape, right? And I think fintech is really sort of, or fintech, has come in and given this velocity, right? And it's kind of started to look at the consumer in a very different way, right? What are your thoughts about that, right? I mean, this is very different from what an archaic system used to be, right? The way banks lend, right? It was a very two-dimensional structure where, which had a limited understanding of a certain customer, right? It was not a structure which was factoring in many risks and many opportunities and many possibilities, right? And I think fintechs today are solving it in a very different way, right? What's your sense? I mean, last 2.5, 3 years, 4 years have been very exciting in that sense, right? While of course you've been a participant, you've also been an observer, right? What are your thoughts about this entire the unfolding of the space that has happened, right? How have you observed this, right? What is something that has kind of excited you particularly?
Look, I mean, you're right. 10 years ago, when you had to take a loan, you effectively had to wait for about 30-40 days before you'd even get there. And the process was excruciating. And I kind of sensed this. In UK, I wanted to buy a car. And I did not have money. So we went to one of those offline car pools where you go and watch these cars and then you pick one and then you put a sticker on it and then you can buy it.
Right.
started borrowing money when I got onto that journey to that carpool area.
Right.
And in 30 minutes, I had money in my account
Right.
to buy the car.
Right.
And it's a different experience, right? So and world is changing so fast. In fact I call this the Heisenberg Principle in lending, because the position and the velocity of the market is almost unknown even today, because this is a regulated environment, right? So there are multiple macro factors at play. The regulation is changing, the customer is becoming more aware, there's more capital coming into the country. So 5 years ago, for example, when we started the business, 80% of the people used a desktop or a laptop to access our website.
Right.
Today, that number is non-existent. That's 2%.
Right.
2% of people do it on a computer. Everybody does it on a mobile phone. 10 years ago, there were no mobile applications.
Right.
Today, everything is done on a mobile application. Right. So the amount of digital savviness, and 5 years ago, if you and I were talking about digital savviness, we would have said that means computer knowledge, that means this, that means that. But today, every individual knows how to chat on WhatsApp, how to upload images on Facebook, send it on, and search on Google. And that's all it takes to get a loan today. Right. So the amount of transformation that the customer has gone through is actually driving all of this. The regulator and the companies are actually reacting to those newfound customer segments and their skills.
Right.
Also, because we are talking about regulators, the regulator in India is doing a bunch of amazing things. Right from opening up the Aadhaar processes for KYCs, setting up NPCI, digital data, bank accounts, neobanks, all of that is actually leading to a very good concoction of what you can call is the next 10 years of financial services in India. No, we're not going to recognize what it is today versus what is going to be 10 years later.
Right. Interesting. Abhishek, with that, right, we'll move to the Flexi Loan story, right? So what's the construct of Flexi Loan, right? I mean, how are you operating, right? How have you, I mean, there is a technology layer, and then of course there's a co-lending play, right? Tell us a little more about that. Tell us a little more about the construct, the relationship, right? Of each of these, parts, right, within the larger business.
Right. So, look, I mean, when you talk about a lending business, you're effectively talking about three key aspects of it. Sure. One is, how do you get access to customer?
Right.
How do you assess that customer? And how do you actually bring capital to give to that customer? Right. Now, each one of these three have a very interesting journey at Flexi Loans. So, first of all, we are a pure business lender. And this market opportunity is about $250 billion, right? Which is the debt gap in India today. But we've narrowed it down to about a $21 billion obtainable opportunity at this point of time. And these are effectively the proprietors that you see outside your house when you walk on the street. So the pharmacy wala, the grocery wala, the mobile store, a place where you go to get your screens, the places where you go to get your clothes. All of these are our segments. So proprietors with 1 to 3 employees in their shop, only one shop, which is their household income.
Interesting.
That's our target segment. Now, when you think about that target segment, it is so distributed, so wide, languages are different. When you have to access pan-India, then you can't do a branch model. So our first point was, okay, where do we find these pools of MSMEs? And the answer was that, look, the MSMEs are already getting aggregated on Flipkart and Amazon and Google Pay and Phone Pay and Swiggy and Zomato, because there is somebody who's already aggregating them. Right. And so we started partnering with the B2B guys.
Interesting.
And that became our first and the biggest origination play. Right. So we today have access to about 40 to 50% of this market through these partnerships.
Right.
Everybody who aggregates MSMEs is our partner for lending.
Okay.
Now, what it does is, now it solves the access problem.
Right.
The second problem is, now how do you assess these guys? Because these guys have very thin banking. They're predominantly cash businesses, haven't borrowed in the past. 50% of our borrowers have never taken a business loan.
Right.
So now, and that's where the data science and the risk comes in.
Right.
We've invested so much in data science to be able to actually find out that this is a good borrower or a bad borrower, or what is the propensity of risk of that merchant. Right. And this is a story in making 5 years, and this will continue till we live, about how do you make better risk models. That allows us to now do things at scale, because what happens is, when you have to give a 2 lakh rupee average ticket size loan, you actually can't spend humans on it. Right. Because 2 lakh rupee pay, effectively you will make about 2,000, 4,000 rupees.
Right.
Now, if you to make 2,000, 4,000 rupees, and if you do 2 visits to that merchant physically, that money is gone. So you cannot be profitable for a small ticket size loan.
Interesting.
And so technology and data science becomes a core of our platform.
Right.
So now, okay, we solved the access problem. We've tried to assess it fast and assess it accurately.
Right.
Now what happens is, how do you get capital? Because capital is raw material. So we have an NBFC, and this NBFC effectively takes care of about 50% of our book today.
Okay.
But in 2019, when ILFS crash happened, so we realized that getting the money from the market is getting difficult.
Right.
And our cycle was raise equity, raise debt, raise equity, raise debt, and debt was difficult to come by. So we started a co-lending franchise.
Interesting.
The co-lending franchise effectively is dissociating capital from risk. So what we're saying is, look, there are pools of capital, which are banks and large NBFCs. They have capital, they don't understand the MSME underwriting.
Right.
So we said, okay, we understand the MSME underwriting, you've got capital.
Right.
Let's marry the two. So at some point, when fintechs and banks used to talk about it, they were competitors.
Right.
Now they started becoming collaborators.
Right.
And so today we have about 10, 11 banks and NBFCs on our platform, which we call as Bifrost. Bifrost is effectively the gateway to capital. A bank can come and get associated through an API integration.
Right.
I will bring a potential seller on Amazon, underwrite them, and get them money from a bank.
Right.
And effectively, the relationship between us and the bank can be anything. It could be a risk reward sharing, it could be an FLDG arrangement, it could be a pure referral. That is a commercial construct. But the architecture of Flexi Loans is effectively, we are solving the problem of credit in India by providing technology, risk expertise, and unlimited capital to the borrower pools.
Right. Very interesting. Abhishek, I particularly like the comment that you made, right? That banks don't have an understanding of SME, MSME, right? And lending, right? And that's a very bold and a sharp statement to make. And where I come from is that banks have lended for the longest time, right? There are models which have evolved, right? Of course, I mean, I understand where you're coming from, right? These are two-dimensional models, right? There's a certain process that they have to follow, which essentially means that there's a lot of time involved, there's inefficiency in the process, and so forth, right? But how are you doing distinctly, right? Also, the fact that you are in a B2B2, say, C sort of environment, and C becoming another business, right? Where you're going to aggregators and then eventually sort of lending on that. Doesn't that kind of limits you, right? Because at the end of the day, you'll possibly be lending on the operations that they have on that platform, right? It could just be about 20-30% of their overall operation, right? How does that change, right? Are you only participating for the 20-30% that that these guys are performing as an operating activity on the platforms, or are you going in for the full stack play, right, where you're factoring in their overall book and then lending on top of that book, and the relationship on a platform just becomes a key indicator, right? It becomes a certain weightage in your underwriting model, right? I mean, how is that piece coming together?
Right. Great question. And that's been the journey of how our underwriting has evolved. On day one, we did what you're saying. Look at the 20-30% of their cash flow and do the lending. That becomes fast, that gives you access to data, access to customer. Over time, we realized that we will lose a part of the market because they want more money.
Right.
And so today we underwrite the business.
Right.
So these origination capabilities basically bring the customer in. But when we underwrite the customer, we look at their entire GST profile, their entire banking profile, and then give them a loan. So effectively, we are underwriting the business, but we are originating them from various sources. The other thing is, effectively what happens is, over time, you start to develop these algorithms. Where, for example, we know that a restaurant in Bombay typically has 30% coming from one of the food tech platforms. But the one in Udaipur gets only 5%. And the one in Jaipur will get 11%. So we now have these algorithms which can actually predict the invisible. So when we see the 10% that is coming from the platform, we can predict that this number is they also have a 90% potential other business that we are not able to see. And then we effectively start pricing the risk. Look, in lending, and one of the questions was, banks have been doing it, but what are we doing that is different from the banks? And the idea is that we are pricing the risk. We are not saying that we are going after the same segment where the bank has gone. We are going after a segment which banks perceived to be high risk, and they never lent it. Now, I will give you a simple example, Ashu. Take any worst cohort in a bureau, random sampling karo aap bureau ka, and take the worst cohort, it will show a 20-25% NPA. Right? Which means 75% of the customers are good. Right? Our ability is to find those 75%. Because the banks have said, okay, let me not look at this 100 because इसमें 25 खराब है. I am saying, look, इसमें 75 अच्छे हैं. Let's look at it. So we will go lend to these 100 guys. And then we will price the risk because we know this is 25% NPA segment. So we will charge everybody 25% extra. And at some point, we will know that how to separate the 75 from the 25 through an algorithm. The next time when a guy comes in, we will know this is from the 25 or this is from the 75. And that's how we are getting access to the 75 ka pool, which nobody else has gotten access to.
But that's very interesting the way you put it, Abhishek. But isn't that what everybody's going after, right? I mean, everybody has essentially in the fintech ecosystem is working on a similar thesis, saying that this is an underserved segment, right? There is there's a possibility of an NPA, a delinquency that could happen in the 2025, right? And let's continue to pursue the 100, right? And improve that 25 over a period of time. But what is also happening is that the price of acquisition, the customer acquisition cost is kind of going through the roof, right? Because everybody's kind of looking to deploy that capital very, very fast, right? What happens in a scenario like this, right, where there is over liquidity, and there could be a possible judgment call that is happening, right? Where you're saying that, listen, that this could improve over a period of time, but given the liquidity condition in the market, right, that inefficiency is not getting sorted, and while of course algorithms will improve, but humans don't, right? And that's the whole gap, right?
So I'll give you a startling number.
Sure.
There are 6 crore MSMEs in India.
Right.
Okay, organized. We don't know the unorganized because they don't become a part of the census. Out of that, 4 crore are effectively these proprietors.
Right.
Out of those 4 crores, 3 crore have never borrowed from a bank.
Right.
Okay. And all fintechs combined, the top 10, have given about 10 lakh loans.
Right.
3 crore MSMEs who are underserved, 10 lakh loans.
Right.
So the question is who's going after the 3 crore, who's going after the 10 lakh.
Right.
So when we look around us, we feel everybody is giving loan to this apparel store in Mumbai.
Sure.
But when you go to Udaipur, you realize there is nobody there.
Right.
And 50% of our demand comes from tier 2 and 3 cities.
Interesting.
So, and that's the nature of the selection, right? Because if I was a lender, would I choose Bombay or would I choose Udaipur? I would choose Bombay because I can create my book really fast. I can give money to the guys who everybody else is giving money to. And I will effectively burn money by giving a lower interest rate because this is a highly competitive market. But the Udaipur guy is still waiting for money.
Right.
And because of our digital rails and because of our partnerships, and our underwriting capability, we are able to get access to that Udaipur guy and give them a loan. So you're right that 10% of our book competes with everyone. And that's where it's, but 80 to 90% of our book actually does not compete with everyone because we've chosen a segment. And the point that you're making is absolutely right, that there are players out there who are trying to give 25 lakh, uske upar 10 lakh, uske upar 10 lakh to the same guy. And it's a stacking of loans, which is a basic issue in that entire customer NPA history. But we don't do that. We are after a segment which is purely underserved. It has served us well. So today, our COVID performance has been far better than others because we've never over-leveraged the merchant.
Interesting. Abhishek, that brings me to a very interesting question, right? And this is a question on 2020, right? And I think this has been a very difficult period for each one of us, right? At a personal level and at a professional level. And I think professional level has been kind of less talked about, but I think the pain is fairly visible, right, out there in the market. And specifically SMEs and MSMEs have gone through a huge disruption, right, in terms of their ability to service existing loans, in terms of their ability to grow, because literally the customer landscape kind of dried up, right, and in a physical environment, right, and that made them to sort of choose a digital environment. This is something that they were not necessarily very comfortable with, and they're kind of grappling with the issues and all of that, right. While the government has come out with moratorium, right, and wanting to give them certain comforts, this has not been enough, right. I think they're still trying to come up the curve. The rate of savings is drying, right, which essentially means that they'll have to depend more on formal sourcing. That makes this entire situation becomes very, very complicated for you as a lender, right? Because on one hand you have to manage your book, and the other hand, you have to sort of ensure that this business stays afloat, right? Because if it holds up, that's literally a write-off, right? In your case, right? How are you tackling with a situation like?
So when we, the day when four of us decided to do lending as a startup, we signed up for one thing, which is macro cycles.
Right.
Interesting. And people who built businesses before us, bankers, they've seen cycles every 7 to 10 years. Okay. Now, we did not know that when we will start a lending business, we'll see a cycle every year.
Right.
And cycles are coming faster.
Right.
Some of them are in the shape of demonetization and GST. Some are in the shape of ILFS crisis. Some are in the shape of Corona. And it is, I think this is a health crisis that nobody predicted, and our bigger impact on MSMEs. There is no, I mean, no matter which segment you look, even the e-commerce that we see that it is growing, it is growing in pockets. It's not growing everywhere. Not everybody who's selling on e-commerce is able to do really well.
Right.
So there are multiple ways and methods in which, but point number one, actually, when governments make policies, they don't understand the proprietor's pain. They're making policies with some other guy in mind.
Right.
And all the schemes that came during the COVID-19 period did not reach the MSMEs. The MSMEs that I'm talking about. There are other MSMEs which may be there, which may be getting it, but not our MSMEs. Because they capped the interest rate at a certain percentage. Typically, that is lower than our cost of borrowing.
Right.
So we can never give out a loan lower than our cost of borrowing. So we effectively, the pool is not eligible for an ECLGS scheme.
Right.
So and so they were left to fend for themselves.
Right.
Moratorium was helpful to some extent, but then wave 2 there was no moratorium, and then restructuring happened, but it is actually just delaying the inevitable at the end of the day. So there are some sectors which have been hit more, like a restaurant and travel sector. And there's some sectors which have been hit less, like the e-commerce sector or the grocery or the pharmacy sectors.
Right.
There are multiple actions we took. You will be surprised. I mean, typically 95 to 97% of the borrowers are good, right? So they have been doing two things really well. One is communicating with us to figure out their options.
Right.
And second is helping them to find other ways to sell their goods.
Right.
The supply chains got crunched, and so they were not able to buy and sell. So we started programs to effectively connect them to distributors who could provide them with goods, and then connect them with these platforms that we already are a part of, on how to sell on Amazon, how to sell on Flipkart, how to use Google Pay, how to use M-Swipe, and so on. We effectively started a program to help these MSMEs get through this period. And this was a no fee program. It was only about helping them.
Evangelizing it.
Of course, and a lot of good came out of it, in the sense that now we are seeing a lot of more digital payments happening in their bank statements. So while their balances have reduced, their turnovers are more digital than they were.
Right.
And so there's some good that is coming out of it, but it's still far from kind of over. And I am always disappointed that MSMEs who employ 50 to 60% of Indian working population have no support from the government.
I know, and that's a difficult one, right? I mean, I understand the pain that you talked about, right? And I think that entire backbone needs to be strengthened, and I think we're doing far from what's needed, right? Abhishek, I'm going to take a step back, right? I'm going to talk more about risk, right? And I think that's defining risk. I think is the most critical piece of what you do, right? And I think any other financial institution would sort of do, right? And 2020 has kind of really kind of changed that scenario as well, right? That ecosystem as well, where we can go on to define risk, right? Earlier there were certain methodologies, there were certain transaction histories, and then you could sort of go up, so you could go on to sort of build some predictability, right? In terms of how this business is going to shape up, the larger trends that you could factor into your risk model and stuff like that, right? Now what has happened is, and more so on the consumer side, is that today a consumer is getting influenced by many factors, right? There was basically inefficiencies of physical influence that used to be there, and that caused a lag. But I think that's kind of gone away, because now it's more content, right? Everybody's logged up, they're watching content, and this is so arbitrage which existed between, say, a market A and a market B is kind of gone, right? And that's brought it's made everybody equal, right? So Abhishek sitting in Bombay and Ashu sitting in say Delhi are almost equal, right? Or somebody sitting in Bangalore. to a Kanpur or a Bhopal or Jaipur, right? There could be there was used to be a very big, large difference. Now the difference is kind of reduced to a very, very small, difference, right? Aspiration has come in. What that has also done is that possibly is going to, bring in a very different kind of risk in business, right? Which will essentially mean that the product life cycles aren't going to be as long, right? Inventory overhangs are going to be much higher, right? That brings in a lot more efficiency if the businesses don't plan it right. Uh, does that exposes you as a lender to a very different kind of a risk which is getting built into the system, right? Because of the dynamism that is coming to the consumer, right? How are you preparing for that? I mean, is that something which is, I mean, you started to factor in your models. Is this something that you're looking at, something that is going to go on to be built in future? How are you going to tackle that, right? Because I think now has really come the time when the consumer aspiration is flying like no other, right? That arbitrage has gone away, right? And aspiration is speaking, right? I mean, demographic dividend is something that we've kind of raved about for the last 7-8 years, right? And it's been there, right? It's been our biggest advantage, right? How do you prepare for an environment like that, right? Where businesses might have to deal with inefficiency because there is a certain, I mean, they take time to react, right? And becomes a problem. What's your sense of that?
So while it's early to actually say that how will an MSME 2 years down the line look like, but I'll give you some early indicators of what's happening.
Right.
Indication one, people are actually becoming more conscious about borrowing.
Right.
Which is very counterintuitive, right? But everybody who used to borrow in the past went through this difficult phase of not being able to repay, having a conversation with the lender, getting their bureau record, getting kicked, going through this moratorium period, borrowing from friends and family to be able to pay very simple EMIs that were easy. And so now what we're realizing is there is a more higher proportion of merchants who are saying, look, you are willing to give me 5 lakh, but I only want 3 lakh.
Right.
So there's a credit consciousness that is coming in, which is a very good sign.
Right.
It is also reflecting in the early performance of our book. So the loans that we gave between wave 1 and wave 2 are actually performing far better than the ones that we gave pre-wave 1.
Right.
And so the credit consciousness is increasing. While of course we will see higher NPAs in all the reports that will be shared by everyone, but that's the pre-COVID book, which went through a lot of struggle. But the ones who are borrowing now are more conscious. Second is you would expect that in a market like this, the demand will go through the roof. Everybody wants to borrow.
Sure.
No, people are actually, those who have come out of it stronger. And it is true for both merchants and companies like us. When you survive through this, you learn how to do more with less. And our burn has gone down. Similarly, MSMEs are able to do the same amount of business with one less employee. And so they've kind of rationalized their cost structures, and they have effectively figured out how to digitize the supply chain. So an MSME has only 2 problems in life: commerce and logistics. Which is
and real estate.
And
real estate.
And real estate, of course. In commerce, effectively, I bundle everything in the sense that how do I find customers, how do I put costs in, and how do I make profit at the end of it. And logistics is all about how do I get access to goods and how do I get those goods back to the customer. Now, because of the fact that there are these logistics players that are coming in, there are a lot of these digitization entities like Khata Book that are coming in. So they're able to do more with less, which is again a good sign because they're becoming more foundationally stable. Now, the third aspect of it is there is, of course, a lot of dead bodies in loan books, which is people who appear as somebody on the loan book, but they're actually not dead. Not literally, but effectively from a credit point of view. And that is something that NBFCs and fintechs are effectively, there's a moral responsibility to be clear about what's there, what's not there. We'll see a lot of surprises in the next 2 years. Everything restructured will eventually appear out to be dead. And so as a company, what we believe is that if you are true to that number of restructuring, that whether this is worthy of restructuring or not, that's an important aspect. So there's a moral code to doing good lending, because lending is, as a business, is not gravity defying. You can't scale. You can't give money out and say, look, I have got 1,000 crore book, because the profit is the last EMI. The last EMI is literally my profit. Everything else is my principal that I've given. And so we've taken a conscious call to only restructure what we feel can be recouped back. Everything is written off. And so our restructure, for example, will be about 1/3 of industry average. But it is still, I think, because we are all so early in our game and the valuations and the fact that we want to show higher book sizes and all of
Right.
it, it
Right.
becomes a little bit of a muddle, which you can't kind of understand very easily. The downside to that is attraction of capital becomes difficult. So you will see there is no, I mean, you're seeing bunch of money coming in.
Right.
Is anyone investing in lenders?
Right.
Because nobody knows how many dead bodies are there in the book.
I agree. I agree. I think that that is possibly also bringing a certain sense of sensibility, right? I mean, certain sensibility into how founders were looking at it, right? How companies were getting built, right? I think it was madness, right? I think everybody is focusing on deployment without necessarily worrying about the quality of deployment which was happening. I think this is going to bring in some sanity, right? You cannot go out and create a structure and a valuation, like you said, right, on dead bodies or underperforming or non-performing assets, right? It cannot be a game like that, right? And hopefully, it'll improve and somebody's going to come in and buy that risk and all of that, right? I think it's just a wrong. I don't know, a construct, right? I just don't find it balanced. I think sensibility needs to come in, and I think we'll talk more about that, Abhishek. But listen, my next question is, right, given what we've seen, and given earlier point that you'd made, right, that you're taking a call on business now, right? Not necessarily on a certain relationship that is happening. How is your relationship? Is your relationship, or does your relationship continue to be same with your banking and NBFC partners, or has there been a change in construct, right, of your relationship? Where does the risk sit, right? In certain cases, is it sitting on your books? Is it sitting on their books? What's your role? I know you highlighted, right, that it's a combination, right? But tell us a little more about that, right? In a post 2020 sort of an environment, how's it?
So we have two roles when we talk about the platform.
Sure.
One role is to effectively be the unlimited supply of credit to an ecosystem.
Sure.
Let's say, for the argument's sake, we recently did something with PayPal. Right. So now PayPal has a bunch of MSMEs. Mm-hmm. What we will do is effectively give them access to the entire credit providers in the country, and not just Flexi Loans. So we are solving their problem. We're not solving just the borrower's problem. We're also solving the ecosystem's problem. Right. So the reason, and that's why you will see that about 80% of ecosystems who lend in the country today, we are a lender there. Right. So we have a huge market share there, and that's only increasing because there's a compounding of knowledge, right? And a platform an ecosystem which had to go and do 5 integrations with 5 lenders can only do 1 integration, get access to 5. So it's a beautiful, it's a good way to solve that problem. Right. On the lender side, actually, it's actually grown so fast that we did not imagine. Today, about 60% of our additional loans, incremental loans every month, are done with a co-lender. Okay. What it does is it increases our ability to scale the book tremendously. Right. And for a lender, it's a great thing, right? Because I've got these 40 origination partners. Right. They get access to all 40 of them in one integration. Right. So they're very happy. And we, as a platform, now take risk. Right. So we are not passing. We are not a marketplace. Mm-hmm. We are effectively holding the risk, taking it on our P&L, while the balance sheet could be somebody else's. Mm-hmm. So the money could be coming from a bank, but the risk will sit with us. The customer will sit with us. The ownership of that customer will sit with us, and the subsequent loans will sit with us. Interesting. So now that becomes an overall ecosystem. Right. Now an MSME, and I will give you some other metrics, the 3-year retention of our MSMEs is more than 50%. So more than 50% of our borrowers stay on our book even after 3 years. Right. Typically what happens is, in a fintech lending scenario, you give the first loan, they have a credit history, and now they will go to somebody else. Right. But we are solving that problem by saying that, look, that somebody else is with us only. Right. Why you don't have to go there. Right. We will bring them here. Right. So they continue to be on our platform and engage with us for all of their borrowing needs. And now you start to do horizontal scaling of this. So in the our first product was a term loan. Mm-hmm. We said, okay, some MSMEs actually want line of credit. Let's do line of credit. Look, some MSMEs want invoice financing. Let's do invoice financing. Some MSMEs want buy now, pay later. Let's do buy now, pay later. Some want merchant cash advance. Let's do cash advance. So now the same platform is effectively giving them bouquet of lenders and a bouquet of products. Right. So we believe that now this is effectively a private credit network. Interesting. if you come onto this, you get access to all the good things in the world.
Right. Fantastic. Abhishek, my next question, you literally walked me into my next question, right? And I don't know if you're going to answer it any differently, right? But, my next question was around customer acquisition cost, right? And I think with so many players around, I think that is becoming a challenge, right? And I think also in this, on the other hand, the quality of book, I think the quality of business that you're acquiring also becomes a challenge, right? And I essentially wanted to ask you about LTV, right? But I think you've kind of answered that, right? In terms of the many products that you're kind of offering now, and I think the relationship kind of evolving. But what's the cross-sell process, right? Let me put it this way, right? What's the cross-sell process? So typically, when a business enters a relationship, right? What's the onboarding process? Number one, right? And second, what is the cross-sell process that is kind of deployed by your team, right, to ensure that there is a longevity in relationship?
So very interesting. And you now kind of your question is more about what's beyond lending, because okay, we can give a lending product, but then how does this become a much larger enterprise? And we've been kind of first 4 years we've been kind of heads down focused on building this platform. This year we started thinking about the cross sell part of it, because now the customer is logged in. So what can we solve other problems? So we are acquiring some of the companies who can provide ancillary products, for example, current accounts, for example, GST advisory, and things like that, which these MSMEs need. The onboarding for us is almost like a buying experience.
Right.
Okay. So as a borrower, I go back to my car buying example. I was able to get money in 30 minutes and buy the car. So we are effectively saying, okay, the customer should be able to see the loan eligibility within first 30 minutes. They should be able to know whether they can get a loan or not. Now, of course, the KYC process might be a little physical and things like that, but that's more about just going through a couple of ropes to get the money in your account. But effectively, let's not harass the customer by not telling them whether they are eligible or not. If they go to a bank, they'll have to wait for 10 days even to get the first sanction note, which they get in 30 minutes. And this is hardcore automation at the back end to be able to scrape the entire digital profile, get access to partner data, get access to their bank statement, get access to their GST, combine everything into a risk model, do image recognition, do fraud detection, all of that in a few seconds, and give the result back to the merchant. So experience-wise, we are fairly sorted. We can effectively give loans at scale. Cross-sell wise, we've started a couple of products. We realized that during the health crisis, people wanted insurance. And they wanted to cover their families and their businesses, etc. So we started a cross-sell practice to effectively give option for them to buy insurances. And it's seen some great scale. It goes back to the fact that they need it, we are offering it. And so insurance is a great pickup. As I was telling you, we are helping merchants sell online. We are helping merchants take payments digitally through our partners. And so that again goes really well. And it further establishes a good relationship between me and my partner, because effectively I'm not just doing loans for them. I'm actually also bringing customers to them for their primary business. So now it starts becoming a web of value-added services that not just the customer, but the partner is also getting. On the lender side also, I can bring them not just unsecured loans, but also secured loans, and maybe a home loan too, and things like that. So now each of the entities in this platform is getting more than just an unsecured loan. And that becomes kind of the future growth strategy for Flexi Loans.
Interesting. Abhishek, I like to talk about Bharat, right? And I think, I personally think that's going to be, with what's happened, right, in terms of consumption of content, right? I think, we're going to see a huge rush in terms of consumption, right, from those areas, right? Tier 2, I think, still being exposed, right? Or when you talk about tier 3 and, below, and platforms like, say, TikTok, Musically, Chingari in India, ShareChat, I think they've just kind of, fast tracked that. They've taken away the inhibition that possibly that those markets had, right, in terms of consumption of technology, engaging with technology, right? I think entertainment becomes your step one, right, which makes you enter a formal, ecosystem, right? You watch a lot of things, you observe a lot of things, right, and that brings in a very different kind of an aspiration, right? And I think Bharat is essentially now in that zone, right, where they talk about fashion, and I think many e-commerce companies are talking about, kind of volumes that they've seen, the surge in volumes that they've seen, right? But when you talk of credit in Bharat, right, the biggest of all problems is that, many of these people are new to credit. That's number one. Number two, there is little or no digital footprint, right? Especially in the business environment, right? Because because these are businesses that have largely thrived on, the ecosystem that existed around them, right? So it's been a very
Right.
physical sort of an interaction in that sense, right? What's your strategy on that, right? I mean, you largely a digital player. Do you think this will bring in a new avatar at Flexi Loans where you'll have possibly some field agents, some sort of an interaction on the ground, right, to ensure that these guys are evangelized, right? They are, interacted with, right? They have a certain touch and feel confidence, and they're brought into the platform, right? What's the strategy for Bharat? And how excited are you about as a company, as in terms of what this opportunity could be, right, in terms of credit?
So content, when you talk about content, of course, it has many flavors, right? Content that people are consuming for entertainment, then content which people are consuming for information and knowledge.
Right.
And we are today focusing on the second part of it, which is content which people are consuming for information and knowledge.
Right.
And we believe that the speed at which digital adoption will increase will be higher than the speed at which offline interventions should increase.
Sure.
And so we are not seeing any merit in actually offline assistance to these merchants in order to get on board the platform.
Right.
We want to invest in the platform, let them come in and discover loans by themselves. Because and objective is not to make it difficult such that they need assistance. Make it simple such that they do not need assistance.
Right.
And we are able to increasingly find different intervention points where we can find these borrowers. So merchants are typically, earlier you could run a Facebook ad or a Google ad.
Right.
But typically there are a lot of knowledge forums where they are now found. There are a lot of, not the TikTok kind of content because they're in a different state of mind when they're browsing TikTok, but there are other knowledge platforms where they are found. There are the chartered accountant network in the country is a good place to actually go and find these business borrowers. So there are very specific hyper targeted origination pools that we look at from an offline strategy point of view. But largely we believe that digital is the way to go. We should be able to, I mean, I think when I kind of put on my pure innovation hat, I feel that actually hona ye chahiye that a customer applies for a loan and a drone just comes down, looks at the shop, figures out, yes, shop is real and the borrower is here, takes a photo and then flies back.
Right.
I should not be sending a human there. I should be thinking 5 years down the line and a drone and how would they do contact point verifications.
Right.
And I think that's the future. We've tried multiple times, Ashu, and I will tell you, the more number of humans in the chain, the more adverse selection there is in lending. We believe that zero humans in the chain will actually make the book much better.
Well, I think, Abhishek, we have a problem of too many, right? And I think we'll have to create these inefficiencies to sort of, I think, keep the people engaged, right? I think, and I'm not making a comment on any business, but I think I'm just sort of making a comment on a larger macro situation that we have, right? And I think this is a very real problem, right? I mean, I understand where you're coming from. As a business, you continue to sort of strive to be more efficient, right? And having too many stakeholders in the process, right? And that longer chain can, build a lot of inefficiency. But I think
you're right to that point that when you're talking about Bharat, there's no one strategy. All I want to say is that we believe that the market for our strategy is large enough to not actually do an offline strategy. There are people like iFinance who are doing a great job at providing credit to the really unorganized and the small players, and we can't do that effectively, just like they can't do what we do that effectively.
Right. No, interesting. I like the way you cut it, Abhishek. Abhishek, I'm going to take a step away, right? And I'm going to talk to you more about leadership, right? As the founder, who's building a credit business, right? It's a business which is, it's a hardcore numbers business, right? There is little scope of creativity, right? And like you said, right? While there were many things that you would want to do, I think because it eventually brings you back to ensuring that the book is right, the health is right, the people in the game are right, and all of that, right? 2020 has particularly been a very, very difficult time, right? As people who were involved in the entire fintech ecosystem and fintech more so on the lending part of the fintech ecosystem, there's been a lot of disruption. There's been a lot of uncertainty, right? This is possibly a very, very difficult time, right, for you as a leader, and for many in the organization, right? What has helped you to sort of keep the momentum, ensure that the team is in the right spirits? How has that been? How's that relationship been? Because I think people are the constant, right? Across many cycles, right? And nurturing them and ensuring that they are with you for the longest time is a very important and a critical task, right, at the hand of the founder, right? How have you navigated through those waters during this time?
So I always attribute a lot of what we do to, of course, the experiences that you've had.
Good.
Having worked for 10, 15 years in our careers,
Right.
that really helps a founder to be grounded more than many others. And it's not a comparison, but at least it works for us.
Right.
We've got a very mature investor set pool. We've got a very patient, mature and patient.
Right.
We're four founders, worked for 10, 12 years in our career. We're
Right.
not in a rush.
Mm-hmm.
When we chose lending business, we knew this is a 10-year game. This is not
Right.
a 2, 3, 4, 5-year game.
Right.
And so, and that defines a lot of our leadership and the value system.
Mm-hmm.
At Flexi Loans, of course, we focus so much on value system that we
Right.
have 5 values,
Right.
and every individual in every appraisal is rated on those 5 values, and that is 25% of their outcome.
Right.
So if and this is exciting because I'm very passionate about this, but when an employee joins Flexi Loans,
Right.
they are basically marked as high on all 5 values because we
Okay.
assume that we've hired them because they are high on all 5 values.
Right.
And now you have to really screw up to actually get 1 point down.
Interesting.
So now everybody is good. Everybody
Right.
will get good marks. But if
Right.
if you display a behavior which is against the values, the
Right.
values are very simple. We are in a business of innovation. We need to collaborate with each other. We need to respect our investors and our customers. We need to innovate, and we need to show a lot of agility.
Right.
And every individual knows that this value
Right.
system is important.
Mm-hmm.
And from a leadership perspective, then it makes it very easy because
Right.
you're displaying the same values and you're expecting the same from others, and there is a mathematical way to compute that.
Right.
Just to give you the focus on it is such that we have been a great place to work awarded 2 times in a row, and
Wonderful.
there is no fintech of our size,
right,
because we're small. We're very
right,
small today, but we get selected for those awards because our employees love us. We not let go of anyone. While our business went from about 30 crores per month to zero because
right,
of COVID, we did not let a single person go. And we took care of them. They took care of us. And and a lot of people who've left the company
right,
refer to us as a Flexi family.
right,
Because we still go to their weddings, they still refer employees to us. It's almost like a family that we've created, and
right,
that allows us to be very transparent with them.
right,
There are times when we can't give them the kind of things that they want.
right,
Very transparent with them. Also, we are not the most aggressive
mm-hmm.
book builders on the
Right,
block
okay,
as a conscious strategy, because we
right,
believe that we cannot defy gravity.
mm-hmm.
If we build up too aggressively, then
right,
it comes back unless
right,
we are very sure of what we are doing.
right,
And so that also displays a little bit of risk understanding and risk maturity in the company.
right,
It's not about the fact that, look, if I cannot, I have to do 100 crores this month.
right, right,
We will
right,
do responsible business. We will be conscious about the fact that our actions actually have a reaction in the market. If
right,
we start doing reckless things, then there is a smaller fintech out there who will say, okay, look, Flexi Loans is doing it. We should also do it.
right.
We don't want to set that example.
Interesting.
And very high on compliance. Where I'm alluding to with all of this is that we put so much focus and value on this is that probably from a founder's perspective, 30% of our time is
Right.
invested in these things, but
Interesting.
it gives us a return.
Interesting. I like how you talk of responsibility, Abhishek. I think there are not a lot of people who kind of who put that kind of an emphasis, right, on their actions and their repercussions, right, on the larger set of founders, right. I think everybody's in a very different kind of a chase, right, and I like the way you put it, right. I think that sense of responsibility is very important, right, across founders, and I think that sensibility, right, in terms of why are we raising, what are we doing, what are the kind of pressures, are we spoiling the market for a short-term benefit? I think those are some very, very critical questions. I think they need to be answered, and I think that ethos has to be built within the organizations. I think that really, is a very strong reflection of maturity in terms of how you're building this business. Abhishek, what are the next 2 years like, right? What are some of the exciting things that you're doing, right, at Flexi Loans? Where are we going to see you in next 2 years?
Apart from hopefully at least a pilot on one of the drones that we should do in the next 2 years, we are in the next 3 to 6 months we're launching a very interesting buy now pay later product for MSMEs.
Okay.
That's interesting because I think credit is as e-commerce grows in the country, there will be more and more direct relationship between manufacturers and retailers.
Right.
Distributors will get disintermediated.
Right. Right.
And a large part of that trade is credit.
Mm-hmm.
And there is nobody who, a manufacturer will not be able to give credit to a retailer,
right.
but we will be able to. So there's a very nice product that we're creating to solve that part of the need gap.
Right.
Apart from that, we effectively now, because when I spoke about this whole platform, we believe that now we have a reason to be on the MSME's top of mind.
Right.
And so we will effectively, you will see a lot of engagement products coming out of us. It could be about helping MSMEs. We don't want to be their lending partner. We want to be their growth partner.
Right.
So whatever helps an MSME grow, we will do that. We will not do things which they don't want. We will not do things just for the revenue opportunity. We will be focused on creating things that an MSME can use to grow their business.
Right.
It means if they say that to grow my business, I need my kid to be educated, then we will do that. But we will do only if it helps them grow their business. And so our product selection, some of these things will come out in the next year. We have a roadmap around it. And the third thing is we believe that will effectively be more meaningful to the MSME ecosystem and this partner ecosystem that we've created. And you will see some good collaboration and success stories coming out of it. Whether it is very meaningful for a bank, whether it is very meaningful for an originator, but effectively you will see some green shoots of how fintechs, originators, and banks should collaborate with each other and create success for the MSME. Today it is happening in pockets, but it's not like I cannot write a case study on something today. But hopefully at the end of the next year, we should be able to write a case study.
Very interesting. Abhishek, I tend to ask this question, right? I mean, this is usually the last question of the conversation, right? And I tend to ask this to everybody that I'm speaking with, right? And the question is, right, what's your, say, or 2 or 3 key points that every founder should keep in mind, right, while they're building the business, right? I think we tend to get very mad, right? They kind of overemphasize, over-engineer, over-focus, right? And that brings in a very different kind of an the way we visualize things, right, as founders. And it becomes important for somebody to step up and saying that, listen, these are better ways to do it, right? So I usually ask this towards the end of the conversation, right? What will be your, say, an advice input, right, in terms of 2 or 3 things that every founder should sort of keep in there, keep that in mind, right? That brings in a certain sense of reality, right? And makes them believe that they're part of a larger ecosystem and responsible. They have to be responsible beings. So what will that be?
So I have this thing. I mean, of course, the balcony versus dance floor approach. Typically, all the founders are on the dance floor. Okay, they're all participating, operating, doing the dance with their employees and everything. I think a lot of time you have to kind of go to the balcony, and see what's the big picture. And we tend to kind of do that less and less as we get more kind of operationally involved. But there are 3 things that I believe and it's not just founder, every business leader should be doing, which is focus on top line, focus on bottom line, and focus on direction. That's our only role. Our only role is to increase the top line, increase the bottom line, and give the right direction. And direction, of course, involves a lot of responsibility, culture, but effectively setting the right vision. And if 80% of my day should be about these 3 things. Everything else is noise. Investors will come in if the top line is right, if the bottom line is right, and if the company is going in the right direction. So I was recently talking to someone and I realized that everybody's so busy that the false sense of productivity is in the number of meetings that I have on my calendar. I am busy 8 hours a day. Dude, I am very productive. But nahi, वैसा नहीं है. I mean, how much of that is something that you really need for this company to go from X to 10X? And so focus on those 3 things is an important, because nobody else can do it. Look, everybody else can bring you the right unit economics, bring you the right efficiency, hire right, fire right, everything. But only a founder can actually play these 3 roles, especially the direction. Are you giving the right direction to the company and to the market in general? And especially, I mean, it pains me to see that, okay, in the fintech lending space, there are no big market leaders. if you see, you could take the payment space and you could say, okay, there are these 2 or 3 players who are doing really well.
Right.
But when you look at lending, it's still not mature. It's not ripe.
Right.
And I hope in the next couple of years, we see some of these companies doing really sustainable business.
Right.
And if that happens, then we will create a lot of kind of motivation to these younger entrepreneurs who are coming in. Because today I know that there is a kid out there from IIT Bombay who's going to disrupt Flexi Loans in 5 years.
Right.
It's just a matter of I should be innovating, I should be protecting myself, but I should also be giving them the reasons to kind of innovate. Absolutely. And my actions will determine that. So if we kind of have this self-fulfilling loop going on, then it would be good for the country.
Abhishek, it was a pleasure to have you with us. I mean, usually by the end of every conversation, I land up saying this, right? I wish this conversation could go on. Unfortunately, we are short on time, but I think we're going to save a lot of this for a lot of those pointers that we've made, right, for the next conversation that we have, and hopefully soon. It was thoroughly I enjoyed this conversation thoroughly. It was a pleasure to have you with us, Abhishek. Look forward to having you with us very soon.
Thank you so much, Ashu, and I really enjoyed the conversation. I realized that we've been talking for an hour, constant. So thank you for having me, and look forward to the next one.
Look forward. Thank you, Abhishek.
Take care.